Wondering if you should be spending money to save tax? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey, and one key topic of conversation is always this question around, should I be spending money to save tax? I feel like I'm paying a lot of tax. Let's just go spend money. I'd rather spend it than give it to the tax man. So in this video, I just wanted to talk to you on that question because I think it can be an area, and we certainly find it, where you're out in the business world as a business owner, talking to other owners and they don't seem to have a tax bill and you do, and why is that? And I think it's a great topic to talk about. So before we get into this, if you like these type of videos, make sure to click the subscribe button below to get notified whenever we release more just like it. So should you actually just go and spend money? So let's presume it's coming up to your year end and you're thinking, if you're lucky, you've got a relatively proactive accountant, you'll kind of know where you are with your tax bill. Or if you track it yourself, you might have an idea of what that tax bill is looking like. You're thinking, do you know what, this is pretty hefty. I don't want to give it to the tax man. So kind of generic internet wisdom, as I call it, just says go and spend it. Now, if you've seen any of the content that we've put out over the time, you'd have probably come across me telling you this exact phrase, which is, for me, spending money to save tax is a stupid idea. It's as simple as that. In the right circumstances, if you need something, of course it's going to save you tax, and you should be looking at what's the best way to get the best tax result given what I'm going to spend and when I'm going to spend it. But actually, the idea that you'd spend money to save tax doesn't really make any sense. So I'll give you an example. Let's say you're a limited company. So at the time of recording this video, the tax rate is a mere 19% in what they call corporation tax. Now, if you spent 10 grand on a piece of equipment just before your year end to save tax, you're going to save £1,900 of tax. Doesn't sound like a great deal, does it? If I said to you, give me 10 grand, I'll give you 1,900 quid back, doesn't make any sense. However, the caveat to that being, if you needed that piece of equipment, let's say you're renewing all your IT equipment because they're knackered and actually it's going to increase the efficiency of your team, then that's an investment you were going to make anyway, then of course it's going to help reduce your tax bill. And the best time to do that, would be just before your company year end. Because if you imagine, the line will be drawn and then you'll get a tax bill. Usually, it takes a few months maybe to get your accountant to process the accounts if you've got one, and then you'll get a tax bill back, sort of the final one to pay, and you normally pay that about 9 months from the company year end before you have to hand it over. Now, in order to affect that bill, obviously you spending money just before that line's drawn is the best way, because it's going to reduce your profits, reduce that bill. If you waited and spent the money the day after, then you're going to have to wait that whole year and then potentially like that other 9 months before you actually felt like you were saving any tax. So timing is definitely a big piece, and spending money before your year end is a good time to spend it if you need it. So don't think I'm missing out here somewhere, because if your business acquaintances, friends don't seem to be paying any tax, I don't know how many times I've heard it over the years. Somebody will come and speak to me and say, my friend, he or she has turns over millions of pounds and they never pay any tax. How can I, as a one-person limited company, be paying 10 grand of tax? Well, what we don't know is, are they making any money? I've seen plenty of multiple £1 million companies that don't make any money, no profits, no bill. So that's number one. The other one, of course, is, are they using those profits and doing exactly what we just said? Are they reinvesting in equipment just before the year end that they need? They're still spending money. It's not some magical pot of magic, trick that's making this work. It's literally they're investing. And I think you see the media misreporting this all the time, where they'll say, so-and-so big PLC pays no tax. And then you realise they're reinvesting it all in, millions in green kit to, help invest in infrastructure and all these kind of things. They're still spending a load of money into the economy. It's just they're not paying any tax because, like every other business, they're getting the same sort of tax relief. So there are these rules. So you don't know their situation, but for you, all you can do is impact what you can do. And for me, it's all about timing. If you're going to need to renew that piece of equipment or buy that new van or do something like that, do it just before your year end, but don't go and spend money to save tax. You really aren't missing out. So that's it. And what I would say, if you're interested in investing in big bits of kit right now in 2021, probably right the way, if you're watching this, probably somewhere into early 2023, check out our video on the super deduction if you're a limited company and thinking of buying new stuff. And that's it. Hopefully you feel better about your tax bill and know that you don't need to spend money to save tax. It's not, in the overall grand scheme of things, a great idea. If you know anybody that needs this knowledge, make sure to share it with them, like and subscribe, and we'll see you in the next one.